So if you guys have been following me on social media, you guys would know that I've been on an absolute tear in the markets lately. That's right, guys. I was on my career best ever 50-day green streak. That's 50 consecutive days of being profitable, 50 straight days without a single red day, without a single losing day. Now this streak started about mid-August, during the dead heat of slow summer action where there were a lot of traps, a lot of lack of opportunity, a lot of opportunities to lose money really. But I managed to survive all of that, weather the storm, and keep that streak going. And to put things into perspective, how crazy this really all sounds. It's only about 250 days on average in a trading year. And 50 days is doing some simple basic math there. That's 1/5 of the entire year I spent consecutively profitable. But as the old saying goes, all good things must come to an end. And on Tuesday, unfortunately, the streak ended. I finally met my match. And we're going to talk about the stock that ended it all in this video. But instead of just drowning in my sorrows and crying in the corner, I'm going to go ahead and use this as an opportunity to not only celebrate the streak and be quite proud of it, but show you guys some of the tips and tricks on how I was able to stay so consistent for so long, especially during the periods of time where there was just, so many ways to lose money in the slow summer action where we didn't have really many, grade A opportunities. And I know that consistency in general is, a big issue for a lot of traders. So I wanted to share you guys some of the tips and tricks that I was able to implement in my trading to stay so consistent for so long. So we're going to talk about all that and all that good stuff in this video. So stick around and find out. All right, how's everybody doing? It's Madaz here from madazmoney.com. As you guys can see, I'm back home here in the States. You guys see my sexy home setup in the back. Finally got my video recording equipment back with me. You guys have no idea how hard it is to record videos without like a stand and proper lighting, but it seems like you guys were able to manage with all the videos I recorded in Europe for the past 3 weeks, and you guys still enjoyed it, so that's good to see. We're back here in the States. Let's go ahead and start making some legit looking videos. All right, so the first thing I want to talk about is the Halloween sale. Madaz Money is having a Halloween sale. 20% off the monthly with promo code MONTHTREAT. 30% off the annual with promo code YEARTREAT. No tricks, just treats here, guys. If you guys ever wondered what it's like to have my live audio commentary, my voice in your ear, wow, big epic trades like the BPDH trade where I made $50,000, or the recent SES trade where I made $19,000. Can you imagine what it's like if I was giving you my live thoughts, my live analysis, supports and resistance, tape reads, all that good stuff. A staple of Madaz Money, the live audio commentary. I'm on the mic every single day. So here's your chance to check it out for a discounted rate with our Halloween sale. Link in the description. Take advantage of it, guys. So let's go ahead and touch up on the stock that sadly ended this streak at 50 days. What a remarkable run. But the stock that ended it was ticker symbol TROV, T-R-O-V. And looking at the chart here, I'll tell you exactly what happened. It's pretty easy and pretty simple. There was a big breakout at the end of the day. You can see that stock reclaiming, breaking high of day, hitting that high there around 240. I thought this was a textbook dip buy opportunity. All the shorts should have been caught, but ended up buying the dip there around 210, added all the way down to about 190. I was pretty convinced that I was going to bounce. Stock ended up not bouncing, and it looks like they just dumped really hard into it. The mistake here was clearly ignoring that topping wick. Usually when you see a stock get stuffed that hard, that means that a bunch of sellers came into play there, a bunch of overhead supply immediately stuffed and overwhelmed any demand there on that stock. So as a result, the stock eventually dumped all the way. I ended up stopping out there around that 180 area for a loss. But you know what? It is what it is. Couldn't get back in short either. The SSR was on, short sell restriction was on, so I couldn't get back in short. So I had no chance to flip my biases back. It is what it is. Pretty simple, pretty easy lesson to learn here. Gotta respect those wicks and also size down as well. This should not have been as big of a loss as it really was. End up losing about 7,900 bucks on this, but no need to worry. I've already made back, you know, about $5,000 the last 2 days, so I really only have about 20-something hundred bucks left that I need to recover, and I've been averaging about $2,000 a month, this $2,000 a day this month, so should be able to recover that last remaining couple bucks relatively easily. But I really wanted to use this video again to talk about the consistency of that streak and how I was able to achieve that. And this is the very abstract concept, but let's go ahead and dive into it. So the first point I want to talk about is I have a very simplistic approach to trading. Now, if you guys know me, I'm not a big fan of indicators. This is something that a lot of new traders like to do. They like to put a bunch of stuff in their charts, right? Because the next guy's doing it, or because it looks cool for whatever reason. They throw on like RSI, stochastic, histogram, all this stuff, volume profile. I'm not saying that stuff doesn't work, but it just adds to the confusion. You know, it just gives you mixed signals. It just makes things a lot more complicated than it really needs to be. Trading is already complex as it is, and I just feel like it's just not it's not helpful to the trader to have things that are going to give you mixed signals, right? It's going to give you like, okay, one signal's telling me to buy here, another signal's telling me to sell there, or like what's going on, like MA crosses and all this stuff. Again, guys, I'm not bashing the people that do use it and they are quite successful with it. I'm just speaking for myself. I just use old-fashioned support and resistance. I have a VWAP on there just for reference. I don't really base trades off of it. Just good old-fashioned support and resistance, man. That does the trick for me. And tape reading, that's where I base off of my trades. So guys, just keeping it simple, having a very simplistic approach to trading. Don't be like that guy that, you know, thinks it's cool to stick like 100 million vinyls on his car. Sometimes it's just a little bit too much, right? So keeping it simple, don't confuse yourself. That was one major reason why I was able to stay so consistent, is because, hey, I have exactly, you know, all the tools I need. I don't have more than what I need. I just have enough, and it does the job. The second thing I want to talk about is that I manage my expectations. Now, if I wake up every single morning and I check my scanners, is a typical pre-market routine. I think most people do this. They wake up in the morning, they check their scanners to see what stocks are going to be in play for the day. They build a pre-market watch list, right? But if I wake up and I see literally like nothing that I like on gap scans, pre-market gapper lists, you know, nothing's gapping up over 20%. There's no low floats in play. There's no chance of any stocks with good range or anything like that. I'm gonna obviously start to think, okay, today's probably gonna be one of those days where I'm not gonna make that much money. I'm gonna size down. I'm gonna possibly not make a trade if I don't see anything good at all. And there are lots of days like that during the summer where I wake up and I probably have to just accept that it's probably gonna be one of those Big Mac 500 buck kind of days. And there are a lot of those days, and that's perfectly fine. You know, there are some other days where I wake up and the scanners are full of really good stocks. Lots of stocks gapping, you know, 20, 30, 40, 50% or even more. So these are the kind of days where I'm a lot more comfortable taking on a little bit more risk because there's a lot more potential for reward. So, you know, this is really important to manage your expectations, to wake up and look at the gap scans and be like, you know what, is today gonna be one of those days where it's gonna be really good with a lot of opportunities, or one of those days where, you know, you might want to just sit on your hands a little bit. You know, don't force the issue on a day where there's just not really anything to do. You know, you can't really do much on some of these days where there's just not enough opportunity. So again, guys, if you guys want to check out how I use my gap scan. There should be a link in the upper right hand corner of this video where I show you guys how to set up my trade idea scanners, and you guys can see how exactly I use those scanners to find my plays, my watch list from pre-market. So definitely check that out when you get a chance. Now the last thing I want to talk about is I have a plan for all possible outcomes. Now what do I mean by this? So you guys know me, I'm known for being able to flip biases from short to long, long to short. And there's reasons why I'm able to do this. It's because when I go into a trade, I know exactly what I'm looking for. I know, okay, if the stock, breaks a certain point, this is the inflection point where I need to bail my short and start looking to go long. And if the stock starts falling back the other way, then I'm gonna bail the long and start to look to go short. And being able to be open-minded like this has kept me extremely consistent in my trading. Now, a lot of traders, they make this false assumption that they must stay the same bias. For example, like somebody who is shorting a small cap stock. Oh, this company is garbage. It's a piece of trash. I'm just going to keep shorting it, add to my short, even though the stock is continually in an uptrend, in a bullish uptrend, a clear bullish uptrend. And this is how you end up blowing your account, guys. So you gotta be open-minded to switching sides. Again, check out the video that I did recently about switching biases. This is a very, very important concept, and this is something that definitely has kept me alive through all these years, not just this streak, but throughout all of my years of trading, taking the loss and mitigating the damage before it gets worse. And not only that, but taking advantage of going the other side of the trade. Then you can make back those losses and then flip again if you have to. Flip as many times as you have to, but you need to have that open mind to be able to flip biases. Again, check out that video where I get more into detail about how I do this, but you gotta be able to be open-minded to these kind of things. So there you have it, guys. 3 quick, easy tips about how I stay consistent in the markets. As always, guys, if you guys like this video, give me a thumbs up, give me a like, subscribe for more awesome content. I'll look to post more epic live big money trades for you guys as they come. Let me know in the comments below, guys. What do you guys do to stay consistent in your trading? I read every single comment and I try my best to comment on every single one. So definitely let me know below, guys. I'm interested. I'm curious to see what you guys have to say regarding that. As always, follow me on Twitter and Instagram. Twitter, all of my daily P&L posts are there. I've been posting P&L for like 6-7 years. Daily trading ideas. Instagram for all the fun shenanigans, where I'm traveling all over the world and stuff like that, which part of the world I'm in. So definitely check that out as well. So as always, guys, Madaz signing out.